Crypto Hotep here with another investing video. We are on week 120 of the Family Portfolio and Dividends Tracker. Really appreciate everybody's time. Thank you for tuning in as usual. Really appreciate the support, guys. If this is your first time watching the video, go to the channel right here and click that subscribe button, hit that notification bell. Then that way you'll be notified whenever I drop these updates with this portfolio. And again, guys, if this is your first time watching the video, basically what happened over almost 2 years now is or more than 2 years, I should say, is I gave my family a list of stocks to choose from companies that are well known, and they picked the stocks and companies that most resonated with them. We then proceeded to use M1Finance as our broker of choice, and then every week we go through our portfolio, rain, sleet, or shine. Now, most recently, we converted all individual stocks to ETFs for simplicity purposes, and it's made a whole change of difference in the portfolio for the good. So now the investing is more like cruise control. There's less stress about it. And I'm a big proponent of ETFs, guys. So with that being said, before we go to week 120, but before I go into this, guys, this is not financial advice. Just because my family invests in certain things, certain ETFs, doesn't mean you need to. Please do your own due diligence and research, and also consult a professional. Now, before we go to week 120, we'll go to week 119. 119 saw us with our portfolio boosted up over 5% year to date, money weighted rate of return, 4,700 new all time high, cracked open as well. And that gave us a market gain of $225.71, dividends earned of $32.52. So, again, what happened this week? Now, we've had our markets have been in somewhat of extreme volatility. Now, crypto markets are starting to boost up now, and let's see if that placed any type of effect on our portfolio. So for week 120, we actually went down $4,621.49. Money weighted rate of return of now 3.84%. Market gain of $125.44, and those dividends are still at $32.52. So what actually happened between this week and last week? So let's look at what we have going on here. So between this week and last week, we actually had, let's see, right here, we had actually a deposit. Now, this past week was not a deposit week at all, or a contribution week, I should say. This was not a contribution week, but we were blessed with a bonus, so we threw some money into the markets, just $20 here. So we did have some buys. We bought some QQQ, FSTA, XLY, and then a quantum right here with QTUM. Okay, so let's go to our portfolios, bottom to top as we always do. And at the bottom, unfortunately, is my wife. My wife has a balance currently of $675.08, money weighted rate of return of a negative 2.89%, mark gain of negative $22.85, dividends earned of $4.89. What does her 1 year look like? Her 1 year looks a little bit more promising, money weighted rate of return of 5.18%. Okay, so again, year to date, QQQ tech has dipped down this past week, so we're going to see across everybody's portfolio the QQQ positions are going to be in the red for the most part. So here, my wife's position, QQQM, is down a negative 1.61%. But consumer discretionary is up a little bit of 0.5%, and then those consumer staples that have been basically the backbone of the portfolio is up a very impressive 3.31%. Okay, let's go to our youngest. Our youngest has a balance of $708.85, money weighted rate of return of 6.52%, not too shabby. Market gain of $35.01, and then dividends earned of $4.10. If we go to the 1 year, the 1 year has now ballooned up over 12%, so at 12.40%, and that's a market gain of over $60.09. Okay. So again, QQQ, very similar, 1.61% in the negative. Consumer discretionary, a little bit over a 0.5%. And we talked about FSTA, consumer staples. Again, with the volatility of the markets, trust and money are flowing into things that people understand fully, and also things that are viewed as traditional and a safe haven. And those are usually consumer staples, or like very long-standing, boring companies that you can trust, right? So that's where these consumer staples, and again, that's why we see this green week over week after week. It's just for the simple fact that the markets have yet to have a risk-on appetite. It's more of risk-off right now. But with ESPO, we are still up a very impressive 9.88% money weighted rate of return year to date. Okay, let's go to our middle. Our middle has a balance of $717.15, money weighted rate of return year to date of 13.55%, market gain of $71.72, dividends earned of $5.30. The 1 year is even more impressive. The 1 year is a 21.26% money weighted rate of return, and that equates to a market gain of $97.48. That is very impressive for our middle. But similar to what we said, QQQ negative 1.6, FSTA for the consumer staples up over 3.25%. BCR, which is Vanguard's consumer discretionary ETF, is up over 1.25%, and then again ESPO up over 9, almost 10%. Okay. Let's go to mine. Mine has dipped down. So again, what's crazy is you see this chart. This chart looks insane right now. And then last week, my portfolio was actually up. It was up over 3%, and now we're in the negative 0.4%. So my portfolio is back under here. So $1,243.55. Money weighted rate of return of a negative 0.40%. Market gain of negative $14.77, and then dividends earned of $10.04. So again, if tech's crashing, more than likely those semiconductors are crashing. AI could be crashing as well, but NVIDIA does have earnings that are coming out this week, so keep that in mind, especially with the semiconductors and such. So stocks, though, for the meantime, is in the negative, in the red, negative 9% year to date. SMH negative 6.21%. But again, the savior of my portfolio here is Sky, with cloud computing up over 16.17%, and then cyber, which is the cybersecurity ETF, up over 9.5%. But quantum, QTUM, which we bought the dip on, we are down over 3.5% there. Okay. And last but not least, let's go to our Otis. Our Otis has a balance of $1,276.86. Money weighted rate of return year to date of 5.64%, market gain of $56.33, and dividends earned of $8.19. If we go to the year out's very impressive, 15.97% yearly return. You can't beat that. That equates to a market gain of $148.14, and you're probably beating the S&P 500 with that. So that's not bad, not too shabby at all, I'll say that. But QQQ, again, the laggard here, dipping down, negative 1.7 in the red. XLY, consumer discretionary, we talked about that, a little bit up, less than 0.5%. And then the backbone of the portfolio currently, FSTA, holding everything up over 3.25%. So how I feel about the markets this week, guys. So this week, little bit of a very volatile week. We saw a dip down in tech, as we saw with QQQ. That's going to happen. Am I very concerned about this? No, and this is probably one of the reasons why I went to ETFs, is because when these dips happen, that's when we want to start shoveling more money into the markets. The thing that what I found is the difference between ETFs and individual stocks is that with individual stocks, it makes you a little bit more nervous to put that money where your mouth is, so to speak. So if you're investing into individual stocks and that individual stock drops 10, 15, 20%, it's really hard to buy that dip again because it could dip even more. The ETFs is a little bit easier because you're basically putting your money into a basket of stocks. So if one does bad, the other ones can potentially bring that up. Does it happen all the time? No. For the most part, though, it does. So, that's why it's a little bit easier, a little bit safer to invest into ETFs, but you can still lose money. Now, across the long term, though, ETFs are an easier way to invest, and that's why I converted my whole family to them. So, guys, with this, we'll end the video. For week 120, the family portfolio saw a balance of $4,621.49, money weighted rate of return of positive 3.84%, market gain of $125.44, and dividends earned of $32.52. If this video is helpful, guys, feel free to like, subscribe, comment. Let me know what you think. Let me know what you're investing in, and let me know how your portfolio is doing as well. But as always, guys, thank you and happy investing.